With regard to variable cost, let's spend a moment or two talking about the insider threat. Employee misconduct covers a wide variety of areas, many of which are related to security cost. Let me provide some examples. Sources have estimated that employee theft and dishonesty cost in the United States as much as between $60 and $120 billion to the private sector. But remember, there are no precise numbers. The variable costs typically are the theft and the dishonesty that robs a company of potential profit and improved margins. We tend to know the amounts only in those individual cases that companies investigate or discover. But most companies do not provide for consolidated reporting of employee theft and dishonesty. There are other associated variable and fixed costs, including the cost of investigations, the cost of human resources and legal time for termination, the cost to rehire a new employee, the cost of training that new person, the impact on reputation. Reducing employee misconduct numbers also obviously reduces attrition costs, related investigative cost, rehiring, and additional training cost. Proactive fixed security programs provide real and measurable benefits, but again, the security director must be aware of trying to prove the absence of these problems to management. Further, intellectual property theft in many different forms is a huge cost to companies. And if the thefts can be prevented by good security planning, then we are faced again with articulating the value of the absence of a problem. Let's talk for a second about insurance. It is a way of mitigating risk if used correctly, but can have terrible implications for security if used incorrectly. Typically, in security-type insurance coverage, the premium after 1 year is the cost of the previous year's losses plus profit for the insurance company. So at some point, continued insurance becomes increasingly expensive if you're not addressing the underlying issues. One of the most significant areas of variable costs can be the impact on brand and reputation. So let's look at an example. In January of 2006, the data provider, ChoicePoint, agreed to pay $10 million in civil penalties. At the time, this was the largest civil penalty in FTC history, and ChoicePoint further agreed to pay an additional $5 million in consumer redress to settle FTC charges that ChoicePoint's security and record handling procedures violated consumer privacy. The case involved the sale of consumer information to, quote, questionable, unquote, customers. Elements of the agreement between ChoicePoint and the FTC included that ChoicePoint would implement new procedures to ensure it provided consumer reports to legitimate businesses for lawful purposes. In other words, know your customer. ChoicePoint would further establish and maintain a comprehensive information security program. Finally, that ChoicePoint would obtain audits by an independent third-party security professional every year until 2026. It is easy in hindsight to suggest that if ChoicePoint had put certain, quote, know your customer programs, unquote, in place, it would have avoided not only the significant fines from the FTC, but the subsequent damage that was done to its reputation and brand. The cost impact due to the lack of security is often not clearly understood until the heroic recovery attempts are being made after the brand and reputation impact is taking place in the public. Furthermore, the issue is not one of the security department alone. Security is one of the team players, including operations, sales, legal, finance, risk management, and marketing, which need to enter into ongoing collaboration to have security enhance the product, thus protecting the brand and the reputation in order to avoid a serious variable loss to brand and reputation.